Well, for more on China's financial and economic stability, I'm joined by Peter Cardillo, live from New York. He's chief market economist of First Standard Financial Company. Welcome to the show.
My pleasure.
Now, as we know, so much has happened with China's economy since 2012, from the Belt and Road Initiative launching, Internet Plus, Made in China 2025, expanding free trade zones, among others, and all as China transitions to its new normal. What stands out to you among China's key economic reforms of the past 5 years?
I think the transition from being an export country to more consumer-based, domestic-orientated economy is probably one of the greatest achievements. Of course, there's been several other factors involved, but that's a big transaction. And if you look at the export numbers, they have been going down, and of course consumption has been going up, and that's a good thing because basically China is no longer depending, that is fully depending, on other nations to support their economic boom.
And so how are we seeing all these changes reflected in China's economy and for the people in China?
Well, I think there's no question there's a better quality of life, obviously. And of course, I think, the reforms eventually will take China to a level of mature growth, but obviously probably stay at a rate that continues to grow at a higher rate of, let's say, the United States or Europe in general.
Now, we know that there's a new report card out from top party watchdogs on 5 years of anti-corruption efforts. Can you break it down for us and the impact that this push has had?
Well, look, there's still corruption. There's no question about it. But they've come a long way, and I suspect that if you look at some of the international deals that they have made, along with the private sector, I think that there's been a lot of progress. Can we hope for more progress? I think so. As I said before, China is becoming more and more of a mature economy, and when you reach that stage, obviously you take out a lot of the bugs that you had when you were an emerging economy.
Now, the last 5 years also saw China reach a new norm of closer to 7% growth. How is that affecting the economic priorities?
Well, 7% is pretty strong growth if you take into consideration that, as I said before, they're becoming more and more of a mature economy. And so when you break that down, that's pretty good. Will they achieve 7% growth this year? I'm not too sure about that, but it'll be pretty close to it. And again, currency reform certainly remains and is key to the major reforms.
And what's your assessment about the pace of reforms and the signs of adjustment that you're seeing in China's growth model?
I would say that they are at a fairly speedy rate. It took them some time to get started, but they did, and that's the key. So the bottom line is that they are trying to achieve what they set out to achieve.
Well, thank you so much for your insights. Peter Cardillo, Chief Market Economist at First Standard Financial Company.